Hello everyone, my name is Matthew Frailey. I'm the founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here since 2003 for individual traders and professional institutions. I also have a set of market trending algorithms that are currently being used by an RIA, which I'm a partner of, managing about 150 million. Hopefully we can grow that over time. Anyway, let's get back to this newsletter. So first off, this is the comprehensive market newsletter for September 11th, 2022. I hope everyone has had a nice weekend so far. It's Sunday afternoon. Futures have actually just opened here. Futures are up slightly. ES is up about 14 points. Anyway, this is our back-end newsletter system, as you can see. I'm going to go ahead and move this up out of the way. So again, you can see newsletter is divided into 8 major sections. These weekend newsletters tend to be very detailed, usually about 40 to 50 minutes or so. So again, this is the newsletter for September 11th, 2022. Just notice September 11th. That seems forever ago, back in 2001, 21 years ago. Where was I? I was actually working in a chemistry laboratory. I remember that day pretty vividly. I'm sure a lot of you do as well. Anyway, as you can see, we have 8 major sections of content. First off, we're going to discuss the recent SPY and ES system trades. They all came along into the week, and we managed to close out really nice trades. I'll discuss that. And we may also see some new trades this week. We'll follow up with the general market, do our top-down analysis approach like we typically do, with our focus on the S&P 500, which is our proxy. We'll also look at market indicators, bonds, and interest rates, major sectors. I'm not going to cover all of them. Just to cut down on the number of charts, we'll cover a handful of them. We'll look at commodities, US dollar, the various currencies. We'll also look at cryptocurrencies, precious metals, GDX, GDXJ, and some individual names from last week, which had a good week. All right. So below here is, I have written commentary, and I have it divided into sections. If you're watching this on YouTube, you can pause this and read it, but really this is better to read on the standard newsletter internet browser page. So here I discuss the reversion to mean systems, which I'll cover in a minute. As far as the big picture, as you know, we view this as a bear market. And Steve and I we're pretty proud of our call. We called for a bear market way back in December because of what we were seeing in the markets. And we confirmed that in early January, well ahead of the curve. We've had a lot of volatility this year, which is typical in a bear market. That's also why these SPY and ES reversion to mean systems have done well, because they like market volatility. Now, short term, what am I looking at on the market? So coming into last week, we favored an oversold rally, given how oversold the market was. For example, the NIMO indicator, it was the lowest it had been the entire year. So that was one thing. The percentage of stocks trading above their 20-day moving averages was buried at about 10%. That's usually about as low as you get. Also, we are near an uptrend line from the June lows and the 61.8 fib. Furthermore, we came into the week with the VIX Bollinger Band buy signal. So everything lined up for a rally. We got a little weakness on Tuesday, but then Wednesday, Thursday, Friday, we had a strong follow-through rally. For the week, the S&P gained 3.7%, while the NASDAQ tech-heavy area gained 4%. And all 21 market sectors closed up nicely for the week. Now, what am I looking at short-term from a technical perspective? So the S&P closed up near a resistance area, but we also have a thin zone up here. So if we do continue pushing, the next major resistance really isn't until about 4,100 to 4,125 on the S&P cash. I can count 5 clear waves to the upside now, along with some MACD and RSI divergence on the 15 and 30-minute time frames. Again, those are short time frames. So once we could possibly get a little follow through, but if we do short term, we should start getting a pullback from that 5 waves. Now, there's a couple ways to count this. Really, there's a few, but the most bearish way would be to label last week's move up completing a wave C, of an ABC pattern. And once this is over, we're going to sell off hard back to the lows. The other view, which I favor more, is that this move up off the lows is a wave A. Then we'll get once we get a pullback, we'll get a higher low, wave B. Then we get another move up in a C. All right. Bearishness is also very high, which is something to be aware of. All right. So we'll see what happens, transpires this week. News-wise, all eyes are on the inflation data. CPI, PPI data on Tuesday and Wednesday, respectively. They came out at 8:30 a.m. on both days. Obviously, that's going to move the market, guys. You know, if that were to come in way down, I mean, the market would like that, obviously. If it spikes up, well, market wouldn't like it. So we'll see where that comes in. You know, bonds, 20-year was down. The 10-year was up last week. Yield curve tightened. Cryptocurrencies all had a good week with the market, especially the stocks. They outperformed, such as Mara and Riot. US dollar had a nice pullback. I'm monitoring this now because you have some pretty good RSI and divergence on the weekly time frame. We'll also watch if the dollar does pull back, a rally maybe in some of the other currencies like the euro and the Japanese yen. Precious metals. Now, gold was only up modestly for the week, 0.35%. But remember, the stocks lead. GDX was closed up 5.5%. So nice outperformance by the stocks. That's a good sign. Early last week, I said the stocks look poised for a rally, and that names that I gave, such as BTG, BVN, AG, GOLD, etc., all had good weeks. So hopefully some of you guys bought those. And this area looks pretty interesting to me. So anyway, guys, let's start off with the charts. We'll talk about the SPY and ES systems. So let's move to those. So this table here, we're going to go through the trades. So coming into last week, as I stated, we had a lot of open long positions on these reversion to mean systems. Remember, we have 21 systems that are looking for trade opportunities. And you can see all the different names here we've seen this year. Pullback trend, CCI, bear long, you know, that's a long that occurs in usually bear markets, high, mid, low, shorts, whatever. We have 21 individual systems that look for trade opportunities. These are the type of systems that triggered this year. So we run the 21 systems on both the SPY ETF and ES futures, and I send trade notifications out whenever these systems trigger. So coming into the week, we had quite a few open trades from the S-trap and the bear long. Okay. So anyway, we had a good rally on Wednesday, and the systems actually closed out. And so against the systems, I manually decided to hold a lot of these longer because I favored an upside follow through in the market, which we got in the week, and that ended up being the best, you know, the good call to hold some of those positions. So on the Wednesday, we had closed some of these third entries like the bear long and I think the S-trap third entry. And then we kept some of these first and second entries. And over Thursday and Friday, we closed out the rest of these. And you can see if you took all these trades and you followed our trade notifications, you'd have done well. Now remember, I'm showing this as a model, $10,000 per entry. Again, that's a pretty low amount. But reason I use 10,000 is because, you know, it's easy to compute, you know, percentages. If you make $1,000 on 10,000 is 10%, right? Or 500 is 5%. Again, depending on your trade size, your positions, your account size, your risk tolerance, your goals, you guys are all going to be at different levels. You might be lower than this. You might be 10 times this, all right? This is just a guide. But even if you just did these small amounts, which again, I consider $10,000 on, say, SPY ETF, a pretty small position, you did well. You know, even the first entry S-trap, which was pretty early. Remember, these systems scale in, right? Sometimes they buy a little early, but they all worked out. And if you followed all these trades this year, just on these dollar amounts, you'd have made about $8,600 this year. Now, we still have open this second entry S-trap, okay? So I'll likely be closing this out this week, especially if we get some follow through, or even if the market sells off, you know, we have a gain there. So we'll lock that in sometime this week. Next, item number 3. So here's the SPY systems that I give. I also give option trades for. And we still have an open trade here from the S-Trap. Okay. And here's how these have fared this year. You'd be up about close to 11,000. Again, not all winning trades, but overall, they've done well. Finally, here's the trade list for the ES systems. And you can see there's been a lot of trades this year. Actually, I think, yeah, more than SPY. Okay. And you might ask, why do I do this? Why do I give trade notifications for both SPY and ES? Because they're very similar instruments. It's because even though they're similar, they're different prices. You'll find that they offset each other. SPY will catch trades that ES will miss. ES will catch trades that SPY misses, or one exit's better than the other. And it's kind of like it averages everything out if you do both. And remember, you don't have to be trading futures. I show the trades as MES futures. That's the micro. You can obviously trade the SPY related ETFs instead if futures do not fit your risk profile. Okay. But anyway, we closed out all the ES systems last week, and you can see they all made money. Okay. Even that first entry, S-Trap and Bear Long. Not a lot, $36, but take a look at all these other trades. 575, 350, 140, 575, 350, $600. So if you took all these system trades this year on the micro, you'd be up 20,000. Okay. Next, image number 5. So this one chart, I got a bunch of the short systems on one chart here. So there's 9 short systems here, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes. Anyway, I'm showing this, guys, because if you look here, see this little bar? Down here is my indicators for the systems. Remember, the systems are into bar, close of the bar. But these indicators are intra-bar, and they'll give me a notification if the systems are looking to short. So if you look here, this QE big time swing 3 is actually now meeting the short condition. So should the market be up on Monday, we might see this take a short, and we might also see the same thing on SPY. So just giving you early heads up. But again, this is early heads up. The way ES is, this closing bar, the current one, doesn't close until 5 p.m. on Monday. So quite a long time from now. So we'll see where it is then. But the systems, some of these are looking to short now. So early heads up on that. Next, let's go ahead and move on back to the general market. So image number 6 shows the index sector table, what transpired on Friday and last week. So again, as you know, I already discussed, the market was up nicely from Monday through Friday. Big gains for the week. All the major market sectors were up. US dollar, healthy pullback. Most of it occurred on Friday there. Cryptocurrencies all up nicely for the week. They usually move with the markets. Commodities mostly to the upside. Crude oil was flat. Natural gas, pretty big pullback. But pretty solid gains here in all these other things like copper, and all the ags were up nicely. Wheat, corn, and precious metals were up modestly. Gold, silver was up a lot more. That tends to be more volatile, but the stocks led. GDX up 5.5%. And bonds, high yield corporate up with the market, TLT down. Next, item number 7 shows the economic and news calendar for this week. Again, big items are the CPI, PPI, inflation data on Tuesday and Thursday. They came out 1 hour before the cash market opens at 8:30 Eastern AM. Next, let's go ahead and move on to the index analysis. We'll start with the bigger picture charts here first. So this chart here is a monthly view of the indexes. Again, it goes back to the earlier 2000s. We had the bear market in 2008. We've had this bull market from 2009. Then we had that big sell-off in February, March 2020, which you see here. CNBC calls that a bear market, but to me, I call that a correction because it was so fast. Bear markets, guys, do not occur within 1 month. Bear markets occur over a period of time, and it causes a change in leadership. You know, old stocks aren't the new leaders, and that was not enough time. I mean, it just recovered in a V, as you know, market. Basically, this is a perfect example of a bull market and a blow-off phase. You had the bull market from 2009 to early 2020. And then after that correction with COVID and all the stimulus, price just had this huge blow-off top. You could see how the slope changed, how dramatically it went up. This year, it's been a bear market. You can see the Dow bounced off its lower Bollinger Bands. S&P got close to it. The NASDAQ got near it, and the 38% fib. We overall, given the backdrop, do not think the bear market is over. But anyway, that's how things are looking. So far for September, the indexes are up about 2% or so. September usually is a weak month, but we still have a lot of the month left. Next. Chart number 9, here's a weekly chart showing the major indexes. Getting similar patterns here. The last rallies stalled in August, mid-August, right at these downtrend lines from the highs. You can see that on the Dow, the S&P, the NASDAQ. Nice rally last week. Again, we'll see where this goes. Again, guys, we'll follow the charts. If price were to continue higher and higher and break these downtrend lines, well, that would be pretty notable. But I think that is unlikely right now. But there you go. All these indexes have a similar pattern. Next. Let's move to the S&P 500, which is our main proxy. So this is the monthly view of the S&P, showing the bull market, which began in early 2009. Back in December and January, we called that a wave 5 into that bull market. We stand by that. So far, we've been right. One of these indicators here below, the 14 stochastic, you can put that on a monthly S&P chart, and that 50% area tends to be a dividing line. When it falls strongly below 50%, like back here in 2008. During the bull markets, it tends to stay or bounce off the 50% zone, as you can see. And of course, we lost that this year. Next. Chart number 11, here's another monthly view. Again, really not going to go way into this, but assuming we're still in a bear market and we form a lower high and come down again, these are some of our longer term targets down here. I know some of these areas in the lower 2000s seem crazy, but retracing a blow off move is usually typical. But on another good move down in the markets, this would be kind of one of our targets, the lower 3000s. Overall, for now, we're up this month. Not going to go way into the bigger picture charts tonight. I did that a couple weeks ago. Next. Chart number 12, here's a weekly view. Again, we already looked at the weekly charts, but you can see this kind of expanding downward triangle. About a month ago, we stalled right at the downtrend line here and this 50-week moving average. Pretty good rally last week, taking back the losses of the previous week. Again, major resistance up in here. We got plenty of resistance up around the 4100 to 4120 area, which I'll discuss in the shorter time frames in a moment. Next. Moving on down, chart number 13, here's a daily chart. So again, we're moving down on a fractal from higher time frames down to the small time frame. So here's the daily. Again, it was amazing how price stalled right at the 200-day moving average. It was almost too perfect. Usually it's not that easy, but that's what happened. It was a good area to go short. And big sell-off over the next month. Price bounced right off this uptrend line from the June lows, connecting the July lows. You also had the 61.8 fib here. Again, everything lined up for a rally last week. And that's transpired. You can see price is now near a downtrend line, which is my initial target. We'll see if price stalls here or wants to continue. Next. Chart number 14, here's another daily chart showing the same thing. Now this one here, I have fibs from the August highs to the recent lows. So we retraced just over 38%. Here's your next major fib areas, 4104. Kind of lines up around this resistance area I've been talking about. And the 61 fib, right up around 4150. Next. Chart number 15. Here's a Sorry about that. I had a phone call that was distracting me. So here's another daily chart. This one has these volume by price levels above here. And these are useful whenever, just for support and resistance as well. So you could see the rally last week off this support zone. This is a big area up in here. Should we get follow through this week? Up into this zone, you could see big was previous support here, resistance here, support here. So this is a big level. You also notice your volume by price. The volume by price is small in here, but it's huge here. So this is a big important level, just like it was a big important level back here. So next. Chart number 16, here's a S&P Renko chart that I made a while back. We've been showing this nice clean chart. Each of these Renko bars, by the way, are 20 points. Again, you can see bounced off this support. Again, this has been pretty good lately. Nice buy here, timely sell here in mid-August, timely buy last week. You can see some resistance up here. Again, guys, if you're on YouTube, if you sign up for our newsletter, we send out newsletters with the live chart URLs. You can, if you want some of these charts, they're all included in our newsletter. Just sign up for our service. Next. Chart number 17. This is a daily S&P chart. This is our KISS trend system. So this went long back here in July, moved the DBTs up, which was hit a couple weeks ago. So it's been in cash. It did make money on this. Remember, these are more set for bull markets. They will take longs and bear markets, but usually for shorter time frames, kind of like this. But what I want to show here is this ATR here. That's resistance up here. Kind of matches with the charts. And the BPTMA is pinching on the underside of the ribbons, which are for now bearishly stacked. Next. Chart number 18, here's the cycles, the marks, other things. Here's the daily up here. Last week we had a buy cycle, support cycle, and a DeMark 9 right there. So everything lined up for that buy, which rally last week, which we got. And you can see the BPTMA is bearishly stacked. It's pinching on the underside. When it's pinching on the underside, that is areas where you look for potential shorts. Kind of like here, pinching on the other side, and we got the move down. Okay. A's the amateur buying. Those tend to mark highs and lows. That I'm playing out there. Again, everything was oversold here. We've got a good rallies. You can see we have some amateur buying and a DeMark 9 on the 130-minute chart, and some amateur buying on the 60. Next, chart number 19. Here's a 2-hour time frame. So a couple weeks ago, we were showing this head and shoulder pattern, which obviously played out. In fact, almost hit it slightly exceeded its measured move here, and we got a good rally. Now, good rally last week. We had some MACD divergence, RSI divergence. So everything was set up to rally, as I've already covered. If we get follow through this broken trend line of the neckline, just extend it out. This is also resistance up in here and an objective area to look for a short. Next. Chart number 20. Here's another 2-hour view. So this shows you 2 of the wave counts that I discussed. So the most bearish view would be the move up here was in wave A, wave B, and then a wave C. And we're completing it. Once we complete this wave C, which could be here, it could be a little higher too. Remember, this is resistance right up in here. Then you get a move down that takes out these recent lows. Okay. The other way to view this is in blue, where instead of an A, B, C here, you got this move up is wave A. Then we get a pullback, higher low, wave B, then another rally in C, and then we decline. Okay. We do have a symmetry break here. This rally is larger than this. Usually that gives you higher odds at a higher low. But these are the 2 scenarios that we're monitoring. Next. Chart number 21. Here's a 60-minute chart. Again, you can see we had this area here, which was resistance. We rallied off this trend line here last week, which we favored. We had resistance here. We took that out. We rallied up to this area. Above here, we got a thin zone, basically to around this 4120, 4125 area that could get a quick move up if we go up on Monday. We closed right at this little resistance. Next. Chart number 22, another 60-minute chart. This also has that volume by price, and you can see how the reason why this is a thin area here, notice you have your volume by bars are smaller here. You know, your volume by bar, the biggest one is right here, which happens to correspond right with this, you know, this resistance area in here, okay, which makes sense. Early last week, I think on Monday or Wednesday, I commented on this bullish W pattern, and it played out. Next, chart 22 is a 15-minute view of the S&P. Also has these volume by bars. You can see Friday we gapped up, rallied. We do have some negative or MACD divergence here, RSI divergence. And the volume by price here, these bars are right in here, small. Those are the smallest ones. So you have a thin zone up into here. Finally, chart 24, here's a 10-minute view. So at the moment, I can count 5 ways up. You had a coil here and then another move up. So this does support that wave A or wave C. And once this ends, it supports at least a pullback, you know, sometime early this week, okay, with this negative divergence and 5 waves up. All right, guys, that does it for the S&P analysis, which is our primary or proxy. Let's take a quick look at the other indexes. Chart 25, here's the Qs. So the Qs rallied and they regained, as you can see, this broken trend line here. 20-day moving average above would be your next resistance. Ribbon here is bearishly stacked at the moment. Next, chart 26, here's the 2-hour view of the Qs. Just like the S&P, we kind of had a head and shoulder here. Price rallied right to the confluence of these trend lines, which is what I expected. I did take a little short here, but not much. Again, if we get through here, this would be your bigger resistance right up here around the 312 area, 312.50. Next, chart 27, here's the daily KISS QQQs. Again, very similar action to the S&P Qs. You can see where the ATR is, and the ribbons are in the same primary configuration as the S&P. Next, chart 28, here's the cycles. Again, similar look to the S&P. On the daily here, you had a DeMark 13 that aligned perfectly with the cycle support. So everything lined up for a rally last week, okay? And short term, little DeMark 9 here on the 30-minute, 130-minute. And we're right up against this ATR on the half day. Next, chart 29, IWM small caps. Amazing. Again, this is why I tell people, whenever you draw a trend line, guys, like drawing a downtrend line from the November highs here, connecting April highs, also just extend that trend line out, because a lot of times you'll find that price will come and retest an extended trend line. You can see it bounced right off of it. All right, guys, that does it for the indexes. We'll see what happens this week, especially on the inflation data on Tuesday and Wednesday. Let's move on. Let's look at some of these market indicators. So here's the VIX. So the VIX, again, as I stated, another reason we leaned positive coming into last week was the VIX had a VIX Bollinger buy signal coming into the week. The VIX was outside the Bollinger Bands, closed back inside. You know, it was a couple days early, but it ended up playing out here. So very reliable signals. The VIX was also uncorrelated with the S&P. You can see the little spike on this correlation indicator. These usually mark inflections in the market. Now, should we get some follow-through rally in the market here short term? This box, this is an area where kind of a supply or demand zone. So VIX this is an area of support to watch. Next, chart 31. Here's the VIX with the DeMark. And guys, if you have the DeMark indicator, you can get this indicator on a lot of places. You know, TradingView is one, but the VIX, these DeMark works very well on the VIX. So here's the VIX, the Bollinger Bands. This is the moving average ribbon. This is the U Pro at the bottom. So anyway, because the VIX does not usually trend for long periods of time, these DeMarks work well. You can see the DeMark 9s, of course, catching these bottoms, tops. And the previous week we had a DeMark 9 there, which told you to watch for a sell-off in the VIX, which we got. Next, Chart for 32, here's the NYMO. As I stated in the opening comments, the NYMO was coming into the week was the most oversold it had been this entire year. Look at this. Down at negative 100. That was lower than it had been the whole year in the bear market. So that argued for an oversold rally, which we got. Next. Chart for 33, here's the NASDAQ with the highs minus the lows at the top. Again, whenever this works its way up near the zero area, usually end up being around market highs in bear markets. Even this last time, kind of stayed up there a little bit, but it ended up catching around these highs in August. It's worked its way. It's getting closer to zero now, so keep an eye on that. Next. Chart 34, here's the AAII bull bear. It's not my favorite sentiment indicator, but you know, one thing to note, it is quite bearish here. Now, again, I don't know if this is delayed. It might be delayed, so, you know, but at the moment, it's pretty bearish here, which, you know, if you're a bull and you're looking for more upside in the market, that would, you know, argue for, you know, market could have some more upside just because there's a lot of bearishness here. You know, whenever this works up closer to the neutral area, like here, or even goes positive, that's been the highs this year. Next, let's move to bonds. So chart 35, high yield corporate, HYG. Remember, this moves with the general market. This also was near a support area. It's rallied up off that. Next, chart 36, TLT, 20-year bonds. So this has been declining. Long-term rates have been moving up. So far, it's still trying to hold this little support area. Is it going to hold, or are we going to get a break? We'll see. Next, chart 37, here's a 2-hour view. We like to draw channels whenever we can, and so far, TLT is still within the confines of this parallel channel lines. Next, chart 38, here's the 10-year treasury yield. This is the bigger picture view going back to the 80s. So again, we had a significant change this year where 10-year treasury yield broke out of this 35-year, you know, channel. So the era of this, you know, the bear market, secular bear market of the 10-year treasury yield is over. So it should be obvious. And long term, this is going to go higher. It could have implications to real estate market, but it's not all bad, guys. You know, savers, older folks who have cash, they'll eventually be able to get a decent return maybe in their bank accounts, which you have not been able to get, let's be honest, for the last 15 years, where, you know, bank money markets were, you know, 0.25%. Next, chart 39, here's a daily chart. Just continues to work higher. It's breaking this trend line. It's kind of moving up this 9 EMA. Should take these fibs off. Blew out that 61 fib finally. Chart 40, here's a weekly chart. So we had a nice big on the weekly back in May, this black doji candle, moving average ribbon very wide. Everything argued for a big pullback in rates, which we got. They've been rallying here. One thing to watch is the MACD is starting to pinch. The stochastic is getting oversold. So that puts me on alert that this could come down again. So we'll keep an eye on it as the ribbon's still pretty wide here. Next, chart 41, here's the yield curve. So the yield curve, you know, has been negative this year. You know, this has been the best signal of a recession, even though they'll tell you we're not in a recession because of the job market. I disagree. So anyway, the yield curve has been coming up, and people have been talking about that. That says, hey, that says that, you know, we're done with inflation, or, you know, we're done. Rates may soon stall, inflation stall, and, you know, the Fed can pivot. But guys, this always happens. In the past, I mean, take a look at this. The yield curve was negative there in 2007, and then actually went back positive well before 2008, before the economy crashed. And that's usually what you find is the yield curve goes negative and then reverts back, goes back positive before the economy really sells off. Okay, so that's typical action. All right, let's go ahead and move on. Let's look at a few market sectors here. So last week, I talked about biotech. I said biotech was starting to stand out, and it rallied nicely here. Looks interesting here out of this channel. It's poked its way a little bit out of the channel. The ribbon here is pinching on the bullish side. Next. Chart number 43, here's LABU. It did break out of its channel last week. If you want a leveraged way to play biotech, that's the way to do it. Next. Chart number 44, here's IBB, another biotech. Kind of has an inverse head and shoulder pattern. This is a weekly time frame. Next. Chart number 45, utilities. They've done well this year. They had sported a bull flag about a week ago, and that has played out. Next. Chart number 46, technology. They've rallied back a little bit, but it's got a lot of work to do. 50-day moving average up here is resistance. 20-day moving average. Got a lot of work to do here. Next. Chart number 47, Apple, Crapple, whatever. So back in August, when everyone thought Apple was going to break this trend line and go to new highs, we favored maybe a B and a sell-off, and that has been playing out. Now, it still remains to be seen if it's going to come down to here. That depends on what the market does. But that's played out. Again, I bring up Apple because obviously it's such a large percentage of the techs, of the S&P, of the Qs. So you obviously want to watch this. Rallied on Friday, but again, closed right at the 50-day moving average here. It's below its 200-day. There is an open gap up here that could be a target as well, but those are some areas to watch. Again, you want to keep an eye on things like Apple, Microsoft, because they're such big parts of the indexes. Next. Chart number 48, here's XLE Energy. Had a pretty good top there back in June. We pointed out this black candle doji. Nice sell-off. This was a buying opportunity around the 200-day moving average. And it's been moving up in this uptrend channel. So if you're long still, congrats. At this point, I'd probably put a stop at last week's lows here, this higher low. Finally, chart number 49, here's transports. Higher low around here. Nice rally. Got a big resistance up here to monitor. Next. Chart number 50, financials. Final sector we're going to look at. They also rallied last week. Again, everything was up last week. All right. Not going to go over all the sectors like we used to. Trying to keep the number of charts down. Let's move on. Let's look at commodities here. Here's chart number 51, DBC, a weekly chart. So commodities were down pretty sharply during the week. They recovered, closed modestly up, bounced off this 50-week EMA here. Obviously, they've been in bull market since 2020. They got very extended up here in May. You can see the RSI divergence. And that obviously played out for a pullback, but pullback and a long-term uptrend. Next. Chart number 42 or 52, here's the daily. So it's been struggling around the 200-day moving average, briefly lost it, recaptured it on Friday. Kind of choppy in here, obviously. Next. Chart number 53, crude oil. This is at a healthy pullback. Biden's happy, I'm sure. Again, I'm not going to get into politics, guys, but anyway, it recovered this 85 area, which has been important support resistance. Next. Chart number 54, natural gas. We pointed out the rising wedge, which played out. Price is now right around this 50-day moving average ledge here. Next. Chart number 55, copper. Weekly, bounced off the 61 fib back in July, rallied up, had a little bear flag look, sold off. So far, trying to bounce off this 200-week moving average. Next. Chart number 56, wheat. Haven't looked at this in a while. Wheat actually looks pretty good. One of our members pointed this out. Kind of has a little rounded bottom to it. WEAT is the tradable ETF. You can see how the moving average ribbons are stacked here. Energy's pent up. Next. Chart number 57, here's the bigger picture monthly view. So wheat, I pointed out back in 2020 how it had this multi-year rounded bottom. That played out. Got oversold here recently. Next. Chart number 58, Joe, the coffee ETF, ETN. Still looks fairly bullish to me out of this big channel. Last week it was down, but found support here and recovered and is out of the channel. Next, chart 59, uranium. That's been one of the bright spots. Again, Europe is being forced to look at this again, obviously, because of the energy situation there with Russia threatened to cut them all off. Uranium here, it's had a nice move up. Last week it broke out of this flag. Next, chart 60, uranium on the weekly. Again, back in 2020, I pointed out this emerging from a start of a bull market. Hell of a run. This here, the way I got it labeled, this ABCX, ABC, would have maybe that lows being in, would be a large ABC correction in the bull market. Would eventually go to new highs. Next. Chart 61, there's the monthly view. Again, you can see how it emerged from this Stan Weinstein type base. Got pretty extended here, from $12 to almost 30, almost up 300%. Nice pullback, and this is was a support area, obviously. And again, under a true bull market, you'd expect this to eventually rally up very nicely over time. Next, chart 62, DNN. Again, all the uranium stocks moved up recently. This had a bull flag here, which played out. Another bull flag last week, which played out. Next, chart 63, US dollar. So the US dollar was up last week and then gave those gains back. Okay. You do have a slight MACD divergence here, but you have a RSI divergence here. And 1, 2, 3. What I mean by that is a 3 pattern push. So you have 3 divergences basically, or 2 divergences really, but 3 points. It's called a 3 pattern push. So you do have some nice divergence here that we'll see if this plays out or not. If this does, that would obviously help precious metals and commodities. Next, chart 64, there's the daily view of the dollar. Again, it's been a heck of an uptrend this year. So far, just a little pullback. It could easily recover and go up again, but we'll see if that weekly divergence plays out or not. And this is your longer term, one of your trend lines, if we do get more of a pullback. Next, chart 65, US dollar on the larger time frame. Again, should the dollar recover and go up again? Well, these are your next higher levels back from 2001, 2002. Next, chart 66, Japanese yen. Chart going back to the 90s. The yen has been absolutely destroyed, crushed, and it's down into this thin zone. Remember I talked about this. Nearing levels from 1998. I think that was the Asian crisis, if I recall. Down in here actually would be an area I would look to buy it, perhaps. Very oversold at this point. It would require the US dollar to pull back, obviously, for this to bounce. Next, chart 67, FXY, that's the Japanese yen. This is a weekly chart. I am watching this coming this week for a potential buy. This is an aggressive buy, guys. Realize that, but you can see the precipitous sell-off this has had. You do now have a pretty pronounced MACD divergence here. MACD kiss, stochastic oversold, RSI divergence. So, I may take a shot at this if I get a trigger. One trigger would be taking out the high of this doji. Next, chart 68, Euro obviously has been killed with the US dollar. It's cheap to go to Europe now if you're an American with the strong US dollar. You do have a potential bottoming in here with RSI divergence, little wedge. MACD is trying to, little divergence here, and it could easily cross up. So we're looking out for a potential. We're on look for a potential bounce in these currencies. Next, chart 69, Bitcoin. It did rally late last week along with the market. Not surprised. It usually moves with it. That rising wedge obviously played out from mid-August, though. Next, chart 70, Bito. That's one of the leveraged ETFs. This was I commented last week in my newsletter, this was a low risk long. You had a nice double bottom support here, and Friday it was up almost 11%. Next, Charber 71 Ethereum. Nothing, no real changes here, still in the same pattern. Next, what did well last week and we commented on were the stocks. They outperformed. They rallied before the respective cryptos, such as Riot here. You can see 2 big up days. Next, Charber 70 Mara, another one, is trying to come up off the lows. All right, guys, let's go ahead and move to precious metals, the final part of our newsletter. So, Charber 74, gold, here's the weekly chart, only up 0.35%. But a couple positives here. Again, this is a big support zone. You can see it's been a support zone since 2020. Yeah, the 200-week moving average in here. That usually is a longer-term support. Ratio is trying to curl up here a bit. The stocks are leading here, so that's a positive. Next, Charber 75, here's the daily chart. You can see here on the GDX GLD ratio how it's curled up and it's slightly breaking this downtrend line. That's a positive. You obviously want to see follow through. This rally here was the largest in the downtrend, which began in March. So Symmetry argues for a higher low, which we may have now. Next, Charber 76 silver up almost 5% for the week. It fell into the support demand zone, and you can see a potential wedge here. And you had divergence. Next, Charber 77 silver on the daily. Rallied up to its 20-day. Again, still got a lot of work to do, obviously. Here's your next major resistance. Next, let's look at the stocks. Now, last week, I thought they looked poised to rally, and they did. And they look pretty good here. So first off, here's that. You can see the rally here. You had a MACD divergent low back here in July, which produced a bounce. But then more likely some sort of fourth wave. Made another low. And we have a second MACD divergence here. We've rallied and closed right at the 20-day moving average. That's a positive. Obviously, we have the 50-day here. But nice to see this. We also have the GDX GLD ratio slightly breaking this trend line. Next, Charber 79, here's GDX on our KISS system. I know this hasn't went back long yet. It really needs to clear this ATR. It actually caught a pretty nice trade back here. February to early April. Kept you out of this big decline mess. So KISS system did its job there. But again, I went long a lot of this stuff last week just because the pattern suggested higher, instead of me waiting for this to flip. Next, Charber 80, GDX Ringco. Now, this has not flipped to a buy signal here yet, but as I've been commenting, the MACD had crossed up before, and that usually is an early sign. Next, Charber 81, GDXJ. That's the juniors. Similar look, obviously. You have your MACD divergence here, closed right at its 20-day moving average, near the 50-day. Next, Charber 82, SILJ, that's the Silver Junior ETF. Has a little channel here. Looks pretty promising. Next, Charber 83, BTG. This is one of the stocks I highlighted last week on Wednesday. I said we had a big volume move up here. The ratio was going straight up. This measures the gold or BTG relative to GLD, and you can see how the ratio was just going straight up. So this was leading, and I said this looked pretty good last Wednesday. And look at these nice follow through the last couple days. Next, Charber 84, BVN. This is another one I pointed out, lower priced one. You had a nice double bottom. It was coming out of this pattern. Volume had picked up there. Look at the volume patterns. Look at the ratio. Again, it was just a lower risk buy last week in this 550 area. The sucker had fallen 60% from the April-March timeframe. Next, Charber 85, IAG was another one I listed last week. It had a nice, beautiful falling wedge here. MACD diversions, which I don't have drawn in here, but again, you can clearly see it. So this looks promising too. Again, I own all of these personally. Next, Charber 86, AG, another silver play. Looks very similar to SILJ. This has broken this channel. The symmetry break here did suggest a higher low, which looks like we got. Next, Charber 87, GOLD. I pointed out this perfect double bottom, and that's been playing out. Next, Charber 88, EQX. Here's another one, a cheapie. This one has a little falling wedge, MACD divergence. This looks pretty good. If it can break this. Heck of a correction. The sucker was $9 back in April. It's now $3.50. Next, Charber 89, HL. This is a silver stock. Kind of has an inverse head and shoulder look to it. Again, guys, you don't play all these. I'm just showing you some of the standouts. The final one, if you want a real cheapie, this is Argonet Gold. It's got a nice base. Volume's picking up here, so I like the base here. So if you want a real cheapie, here's one you could speculate on. All right, guys, that does it for that area. Let's follow up with a few trade ideas that we've been showing. Charber 91, Tesla. Nice rally last week after breaking out of this channel, as you can see. Congrats if you did that. Next, Charber 92, STEM. Was a long idea from mid last week. It triggered out of this bull flag. It's playing out. Next, Charber 93, QSR was another one. It's trying to break through this area. Next, Charber 94, VLD, another potential long if it can take out this area. Next, Charber 95, APDN. It's been on the list. Big move here on news from 70 cents to 7.30. Monster volume. It's pulled back on light volume. This sucker could easily pop again on some sort of news. I took a little shot at it on Friday. I have a stop just below this 200-day moving average. We'll see if it can pop or not. Finally, Charber 96, NetEase. This bounced off this support area. This is one to watch, though. If it starts to stall up in here, you may be able to get a good lower risk short and obviously breaking the support. Okay. All right, guys, that'll do it. We'll see what happens tomorrow. And futures are up a little bit tonight. Like I said, ES is up 12 points. We'll see how it fares in the morning. Have a wonderful rest of your Sunday afternoon or evening. Take care.